Well, welcome back, everybody. Let's follow up from my previous video done midweek. We had team members putting out videos since then, but I wanted to follow up from my thoughts. So I put out the early mini video post or pre-FOMC, excuse me, to try to prepare you for that. And of course, for the last week and a half, I've been talking about these key levels as we were getting ready to arrive up here. One of the big things here was this key resistance. We had this negative divergence up here. Let me just actually go ahead and clear that for you. We had the negative divergence right over here, and so of course then the market took the downturn and then has struggled since getting back up to this level. And of course I had shot that in the previous videos warning you about that area, because a couple of the key things that worried me about this, if you recall, was number one, as we were trying to get up here to the highs, we were very overbought. We also, from a concern perspective here, noticed that the market energy, the price was going up, but the underlying energy here was not looking good. And then at the time when this was happening here, you'll recall that we were basically barely back to the zero line here. So not terribly impressive there from an energy perspective. When I'm looking for those wonderful pushes there, I usually like to see that have little, higher above this key line here, or if I'm looking for a short, like to be ideally down below, right? So there's a lot of things that were going on when we were just basically getting back to that line at that time. So those were the things I mentioned in the video. Then of course we saw that, and then we've gone back up to those exact same areas and then pushed back down on Friday. So as a follow-up, everything I told you in the previous videos there about this key area goes ahead and continues to be the same, and I still have concerns there. And until such time as we can push through this area, pull back down to it, and then actually take off from it, whereas here, tried to push back up, pulled right back down below it, did not pull back and start to take off. Until that happens and this makes this resistance become support, just as excited about shorts as longs from that perspective. Okay. Now, as we then move on from there, let's talk about the day of the FOMC, and even before that. So the thing is that with some of the activities that were going ahead and taking place, I noticed that when the markets had opened down into early last week, what was happening was the hourly chart was in a beautiful bona fide downtrend here, right? And then what ended up happening was, yes, it did have a rally back up. And so what happened was a lot of people were getting really excited about going long at that time. The problem was the hourly was in a downtrend. And so what happened was then the short-term time frames, 1 minute and such, rolled right back over and fired off some incredible sells. And you're talking here like from 21,350-ish approximately, about 250 points, almost $5,000 a contract, move right back down. But what was happening was some people got caught on the wrong side of these things, because as we pushed up to these areas, people are getting long, not realizing that in the end, all this was a short-term reprieve, and the market needed to push back down into the direction of that trend at that time still. So it's always important to understand, where are you in relation to the other markets? And now, so let's bring that forward to some of the things you've learned from me before into what was happening then to the day of the FOMC. You'll recall that I only really want to look for shorts if the champion trend is red and the champion cross is red, right? And I only want to look for longs if the champion cross and champion trend are green here, right? So what happened with the FOMC, if you recall from that morning, I did an early morning video, and I said, listen, the way this works is typically we're looking for some market reversals. You'll get some whipsaws back and forth, and then we actually can see real trends. Well, so I said, I'm going to let those play out for several minutes, all the whipsaw, and then look for a meaningful trend. Well, so sure enough, what happened was the actual rate announcement came out, and so we had a lot of volatility. And then the meeting minutes came out, and we had even more of those whipsaws. And then we actually went to buy side with signals on the 1 minute charts, and the hourly charts were also back to green and green. So this led to some really phenomenal opportunities where signals started firing off real nice. Then we had pullbacks back into the support, and then we started to take back off again and made a higher high until this negative divergence once again locked in, just like I showed you on the daily chart before. And of course, these lock in very quick and show themselves very quick. So then you can see, ooh, yeah, what? You could take a retracement trade here, But then by the time you get back up here, you got to exit out because you're caught within that negative divergence. So until it breaks back above that, where it could potentially become a runaway, we want to assume the divergence is going to go back down. And boy, did it ever, right? Locked back in sells, went to the sell side, champion trend, champion cross, so a bunch of sell signals here, and it rolled right back over. So the key is, but I'm not looking for the short at that point when we're above in the greens. I want to take those long side trades to trade with that trend. And that's the key point that I'm trying to make here, is that I really want to focus on those higher time frames with the lower time frames. Okay, that's where the highest probability trades are going to come in. And so it's just really important that you understand that. So as we then think about, as we went into the end of the week here, same kind of concept here. I'm looking to first focus on the long side trades, and I changed the time frame here because some people said, Rob, I only look at a 1 minute and a 15-minute chart. I don't even look at the hours. I think personally, in my opinion, a lot of you should look at 1 minute charts. Can't tell anybody individually what to do, but if you want to know what I do, I'll look at those 1 minute, 5 minute, and 1 minute, 2 minute, 5 minute, and hourly, daily type charts, right? And there's reasons, and I'll be doing some upcoming classes where I'll show some of that to various individuals who get the invite. So the thing is that so with this, even if you want to bring this down to the 15-minute concept, it's the same thing then. I got the green champion trend, got the green champion cross, so I want to be looking for the long side trades, and then on the 1 minute charts, the signals that go with it. But then we cross back down below and we go to red and red, well, then I want to match that up against my 1 minute signals here, and then only be looking, as we saw here, into Friday afternoon, right to the sell side. And don't forget, a lot of great trading opportunities in that, right? You get all those sell signals I've taught you so many times over and over and over. And this is just one of the tools, what I call my nuclear triad, right? I have the CTP, the Champion Trend Pack, which is an exclusive tool only in WealthCharts. Then we go ahead, so anybody with WealthCharts Ultimate that gets access to that, WealthCharts Apex. And then we have the TRP and the ITP tools. So, but focusing on just the Champion Trend Pack in here. So what happens, right? You get all those wonderful sell signals, and then we pull back up into like Champion Cross, and we come back out below there when we've had these signals in the backdrop. Then I'm looking to get short again. When it comes back out, looking to get short. If I'm not already short, looking to get short, looking to get short. Until such times we close back above like the champion trend. Now I'm done until such time as we go back and get everything back into sell, 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 right? So, and then you're short again. So we talked about those different stop management techniques at the Wealth 365 Summit, right? So I just want to put this in recapping the whole thing from the bigger picture. We're still hitting those key resistance levels I warned you about in advance, and all the concerns that I raised with you, we're still struggling there. The FOMC, we talked about that strategy with that. Wanted to let the whipsaws play themselves out first, and then focus on trading with more solid trends after the whipsaws focus out, and then tie that with the key predominant trends that are taking place around those times. Then we went ahead and, as we look to close out the week, even bringing it down to a tighter time frame for those of you that said you only trade the lower time frames, I want to show you how you use the same concept to find your higher trend, in this case a 15-minute chart, and then tie that in with your lower chart to find some phenomenal opportunities, just like here Friday afternoon. So I hope that goes ahead and helps you a great deal. And play this video over. Watch a couple of the other videos that I did where we tie these different things together and talk about things in advance, and then you see what happens. I just want to see you get better and better and stronger, and be a better and stronger active day trader, swing trader, and everything in between as we continue forward. So thanks for being the world's greatest students. Have a wonderful rest of your weekend, and we'll look forward to seeing the upcoming videos. Take care, everyone. Bye-bye.